The first question is, as mentioned on page 16, Japanese
Yes.
stocks have historically performed well when CPI was between 0 to 2%. It's still okay to assume that inflation to take hold at around 2% this time too. So it's good for Japanese stocks.
Yes, my answer is yes. So we expect the core CPI, or items excluding fresh food, to be just over 2% from a year ago in the first half of next year, and slightly below 2% in the second half of the same year. The reason is good inflation is expected to slow, while service inflation remains around 2%. We believe the wage growth will remain around 3% in next year, and Japan is unlikely to fall back into deflation.
Thank you for this
Yes,
answer. The second question is regarding the exchange
yes.
rates. I believe that many Japanese companies are exported oriented. What is the assumed exchange rate for these companies? If it's set lower than €1 for 160 yen, how do you view the upward revision of corporate performance? And would it be a matter for earnings surprise?
Yeah, since FX sensitivity is higher in US dollars than in euro for many companies, so I will answer in US dollars. So about 70% of Japanese companies that have discussed their FX assumption for US dollars for this fiscal year assume from 130 to 135 Japanese yen, which is significantly lower at above 140 yen level. In general, Japanese companies tend to review their annual internal plan after the second quarter result. For this reason, many companies are expected to revise their FX assumption around 140 Japanese yen per US dollar in their second quarter earnings announcement, which will begin in late October. This is a factor pushing up company earnings guidance. The assumption for euro is from 140 to 145 Japanese yen for about 55% of the companies, which is also significantly lower at upper 150 yen level.
Okay, thank you very much. So the third question is about the interest
Yes.
rate. Regarding the Bank of Japan, it's possible that the interest rate normalized could be accelerated or supported by holding of moderate inflation. What impact will the interest rate normalization have on Japanese stocks, please?
Yes, we currently expect the elimination of negative interest policy to be after 2025. We also expect YCC to be eliminated in 2024 before the elimination of negative interest rate policies. Given the Governor Ueda's recent somewhat hawkish comment, it is possible a House bill will also be revised at earlier timing. If monetary policy is normalized, a risk factor for equity market is domestic interest rate will rise and when yield appreciate. However, even if the short-term interest rate target were revised from negative 0.1% to 0%, the rate hike would be only 0.1 percentage point. Our FX analysts expect the impact on FX market when negative interest policy are removed to be about 5 yen appreciation against US dollars. The impact of 5 yen appreciation is estimated to push down the overall EPS of Japanese companies by about 2%. Well, this is a negative factor, but we don't believe it is an extremely large impact.
Okay, thank you very much. So this is my last question.
Yes.
The PIX forecast on page 3 for CI 2023 is a 2.250 point level. Looking
Yes.
from the current level, is the market currently overbought? Therefore, the question is the same as the title on page 33. When is the best time to buy? When should we enter the
Mhm.
Japanese equity market if you have the answer?
Yeah. In conclusion, we recommend that you enter at any time. Page 33 is a page reviewing the past movement of Japanese stocks. The conclusion of this page is Japanese equities are cyclically sensitive stocks and can enjoy good returns during the global economic recoveries, such as when ISO manufacturing index bottoms out. However, as explained in today's presentation, Japan's business cycle is currently being heavily inflated by domestic factors, such as delayed reopening. Therefore, unlike the past, we don't expect Japan's equity to follow the global economic slowdown. With the current market trend, Toby's target price will most likely be revised by year-end. In any case, we believe Japanese equities can provide good returns over the investment period through the end of next year. Thank you.
Thank you very much for all of this precision about the Japanese economy, and thank you
thank you
to
so much.
Daiwa people.
Yeah, thanks so much.